Happy Thursday, everyone, and welcome back to another StockTwits Q&A session. I'm Brittany Umar, joined by Scott. Red Dog Redler is going to answer some questions for us. Scott, you ready?
I'm ready, and it's great to have you back. I feel like we haven't been here with this forum for like 4 to 6 weeks or more.
I know. I'm glad to be back, and we have a lot of great questions to get to if you want to jump right into it.
Let's just go.
All right, Dieter Trader says, Red Dog, where do you think the market heads from here? It seems to be like there's a lot of mixed signals out there right now.
I'm a little sick, sorry. I'll stay away though. Over the course of the past few days, a lot of people have been feeling a bunch of mixed signals because typically, when you're looking at the market, hang in there, you're not used to seeing Apple getting crushed, which we saw the last few days. So markets hanging in. Yesterday, the Dow was up 80. Apple's getting beat up. Other things aren't really going down. Today, the world felt a bit more normal. Overseas, you had basically a lot of indices make new highs. A lot of people out there saying that Europe's in trouble and their economy is going to the you-know-what. Meanwhile, Germany is at highs of the year. France is at highs of the year. China is finally getting a bounce and some commitment to it. So when you come to our markets, we've just had a very nice move. We had a move from that November 16th low all the way up to the 50-day moving average, and we've been digesting very well. If you go to the chart and you look right here, you'll see, just to talk a little bit about what's happened in the course of the past 6 months or so, here is when we had that low in June. Okay, we had a nice methodical move all the way up to the 1474 highs. Then from there, weren't really sure if it would just continue after some consolidation or we get a little bit corrective type action. But what happened was we wound up getting distribution days, the Nasdaq got weaker, and we broke this trend line that was in place all the way since that low, which was an outside day, right? Outside day, nice appetite for stocks, commitment higher, boom, that's what happened. Here is where you could have taken some risk off, 1440, that was your spot, broke below, retest, got rejected, and then we had a nice little 7% or so correction to the downside. So with that said, this was your new outside day. This was when, people said, I'm going to switch some gears, I'm going to try and get long some stocks, and what happened was very constructive. Boom. You had a wide range bar taking you away from there, showing you appetite for stock down here. Then what happened is you saw commitment, right? We held the top third, continued, and then it took a little bit of time. You had to consolidate a little bit the move, held in there well. And then, if you recall earlier this week, we had a small outside day. So we'll look at it a little bit closer here. You'll see that, this was your day. It tried to go through the 50-day. And it wasn't ready yet. But it wasn't the biggest deal because look at the size of the move we just had. And going into this, the oscillator was like up, plus 60. So with that said, we've had about 3 days of digestion where, it's been a little hit or miss. You've had some nice action in a few different areas, which we'll talk about. But overall, I would say you have a nice flag type pattern here. This is, a nice little bull flag. Here's your pole, right? Here's your consolidation wedge. And then tomorrow we have a jobs number where, I'm not sure exactly what's going to take place, but if it's a decent market-friendly jobs number, we could break and close above the 50-day, then all of a sudden, we could be back in motion for 1440 or 1435 to 1440, which would be the next stop there, along the way. So I think overall, it's been very, I would say hit or miss, and not all sectors or stocks have been created equal. But there's been a lot of great trades out there. It was more compelling when we had that low and we tried to stay with that portfolio approach. But I'm still holding on to a few different positions. I'm trading around the hedge, and I'm going to try and do that. And then we'll see how we open tomorrow and how we have to manage them.
All right, well, let's talk Apple because no surprise there. We have a lot of questions regarding Apple. Here's one from Bella who says, Scott, I'm wondering what levels Apple would need to close below to complete its head and shoulders pattern. Also, is there another trend line at 480?
Okay, well, I wonder if she's short and she wants it to go lower or if she wants to get stopped out of her stock. So I'm going to answer a few questions as well as hers because there's so many questions around Apple. It's been moving around. A lot of investors, their confidence has been shaken. A lot of traders, have had unexpected moves where, you could have got your teeth knocked out if you didn't use honor, stops or honor stops. And if you take a quick look, so, I'll go over, the recent action. If you go here, this was the move, if you remember, from, 2 quarters ago, it missed, and they discounted it. They said, no big deal, it went, and then you had a really nice methodical move all the way into iPhone 5. All right, so from there, it was riding the 8-day, and pretty nicely, it was riding the 21-day, And then right when it broke this 21-day moving average, after this gap down when they announced their iPhone sales, that's when this new trend that was in place, that was methodical, that was somewhat easier to hold, changed. That's when I think I was on Kramer. I'm like, you know what, it's time for a two-way trade. If we break the 21, which we did, we could probably see the 50. And then we did see the 50, but then the action that we measure along the way stayed pretty bearish. We bounced back to the 21-day and failed, this time closing through the 50-day, and that triggered another move lower. So short term, you had a head and shoulders top pattern right here as well, okay? So this was a pattern that people were pointing out, and you wind up having, you know, a quick move down to where we paused again, right around here, but then it didn't stop. You know, relative weakness started setting in, and we continued lower. So with that said, finally on November 16th, you had a really nice outside day. This was a day that on my virtual trade floor I went, you know, pretty long, 522. Here's your red dog reversal type strategy. You had appetite for stock right there, and then it held higher, right? You know, you look at that. So on an intermediate basis, nice little bull flag, continued, and then it got rejected right around the 200-day, right around prior resistance. You know, there was a chance that it could have pushed through. It could have went to 605, 620. It didn't. It turned lower, and you know, this was a decent support that it just sliced through, and then this was yesterday that really surprised a lot of people. I know I went long on this day into the close. I got stopped out right around 563. I'm like, you know what? I'm not sitting in this. I have no idea where it's going to go. If it was going to continue to be constructive like it was right here, it wouldn't break that area, and it broke it. So I was out. But you know what that did is, on a short-term level, okay, it put me in a place today where there was a lot of opportunity. Okay, because you know, if you got stopped out of 563, I know it closed like another 20 points below it. It opened down 10 points today, and it gave you a really nice red dog reversal for a cash flow trade, and maybe, who knows, another swing type trade, because it broke below that low, came above, closed pretty well. So if you look back at the chart again, short term, you had some opportunity. So here was, you know, the pivot point, which was 538.77. You know, it closed at 547. It's almost like 9 points in there, and it did go even higher. Okay, so with that said, you have your outside day number one. Here's another really nice reversal. So for the first time, really, you know, since this pattern took place on a short-term basis, if you want to measure, you have somewhat of a double bottom. Okay, but a double bottom with a lot to prove. Here's your low, here's your higher low. So the question is, you know, can it take out this area? If not, it's probably just an oversold bounce, and then, you know, it could continue lower. And then to answer your question, that's when you start putting on, you know, this big macro chart, okay? Which, if you want to look on a macro basis, you draw this as the pretty much neckline going across. And a lot of people were saying, which could be valid, is you have left shoulder. Now this is a really big head, and this is, you know, going to be the right shoulder developing, and then you have a massive head and shoulders pattern with a neckline coming in right around this, you know, 505 to 520. But, you know, necklines are only valid if they break, and right now, you know, it held in there again, so I think it's somewhat constructive. I think at this particular point, moving forward, we're going to look at the action. I'm long a little bit overnight. So I had a nice little active trade in here, and the way it closed, I said, you know what, it's worthy of a bit more follow through, but small. But you know, I think that it has a lot to prove. If it continues up and breaks this little zone, maybe it's acting better. But this type day should take some pressure off the stock because it held higher, reversal, you know, and it does have some room. If it doesn't get above, just say, you know, 560, it makes another lower high here, going across, goes like this, and stalls again, you know, and then I do think that this could be a problem spot. But for right now, short term, the bulls, they got another set of downs, but they're all the way back on their 10-yard line, so they need to do, you know, some serious marching down the field in order to get away from their own end zone and the danger zone. If you like that analogy.
I do like that analogy.
And you do stuff with MSG.
Oh, see, there you go. But following up on Apple, here's one from Moneyball who says, if you are up in Apple, when do you move your stop to break even? Do you often give up gains in this stock?
Well, today, you know, I'll give an example of the way it traded on the 3 and a 5 minute chart.
Okay.
Because, you know, today it opened down 10 and went a little bit lower, and you weren't sure if you would just get a little bit of a move off the low or if there was commitment for it to continue higher. But, you know, and after the big move from 594 down to, it went to, I think, 518 today, there was some room for more than a $4 bounce or an $8 bounce, so you wanted to take some more out of it. So if we go back to this chart, I'll show you how you measure that. Go to just say the 3-minute chart. So first things first, here is, this is going to be the only line that I put in there. That is the pivot. Okay, that's the pivot for the swing traders, but not everyone wants to wait to that because, you wait to that and all of a sudden you have a lot of room from the low here because look how low it went. So you go to the 3-minute chart and you will see that, there was a tradable pattern in here that showed commitment every step of the way, right? Here was your gap down, boom, hole right there. It continued quickly, stopped everyone out. And then finally on a 3-minute chart, you had a little bit of a red dog reversal where it turned up here. And it happened fast. So I know, if you were on my radio, if you were on the virtual trading floor, you heard me and Sperling say we tested a little bit around 521 because it came off the low. I'm like, I'll buy 521 versus the low here of, it was what, 518 and change. So I'm like, I'll give myself $3. And I had a nice move. Okay, so we got paid pretty well on an active trade. And it also went and pushed through the gap. Okay, so it pushed through the gap, showed a little bit of strength. So right here, I'm like, you know what? That was a nice trade, but why get rid of it? It's still only at like 530. It came in from 590. It can continue. So it flagged. So I can give you an example of my tier system here too, because you can get, just say you were in tier 1, tier 2, sold back to tier 1 so it could prove itself. You stay in tier 1 for cash flow. Then once it started to clear this flag, you add, which I believe we did over the highs of 532, 533. Tier 2. And then it fills the gap. As it fills the gap, you get back to tier 1. So you just made cash flow twice. Gap gets filled. Okay, so right there after a big move lower, that to me was constructive. A few times during the day I talked about levels that it should hold for commitment, each level, each step of the way. So right now you could almost see a nice flag. Here's your pole. Here's your flag, and look, what did it do again? It held up. If you want to talk a little Fibonacci retracements to see the commitment to this move, to see if it was pent up, right here, it hit a high and it held a 25% retracement. So that means if anything holds a 25% retracement to me, that means it can continue higher because shorts are trapped and longs want in. So right there, I said this move's not over in my head. It can continue. It just went positive. Typically, a stock like Apple goes positive. It should have followed through and went positive for a reason. So you take this off and you get rid of it, which I just did. And then you just say you were back in tier 1. Then as soon as it starts clearing the flag right here, you get back into tier 2. Then you have another nice move into the consolidation from yesterday. And then you get back to tier 1 and say, okay, I'm going to let Apple prove myself. But all of a sudden, you just held tier 1 from 521 all the way up to almost 547. I think that's when I got out of it. I'm like, wow, into resistance. I just caught a really good move. It took an hour and change. Let me give it some time. And that's where, I on my virtual trade floor, I left there. So you could have held a tier 1 from 521 all the way up to almost 547 for almost like 18 points or so. And within that, you could have made cash flow here and here and enjoyed these little chart patterns. And then if you go to the 13-minute chart, just to see, how it, then came into this. This was the support from the prior day, so it became resistance. And then overall, if you look at the 13-minute, this showed commitment to the low there. So if you want to do a Fibonacci retracement again, because this is what I thought to myself for overnight, because I did take some, you go to that little high here, right? And wasn't as pent up, but really from the low to where you hit to where it consolidated to absorb this move, it held a 0.382% retracement. So overall, to me, it showed a little commitment to this bottom, so that's why I took a little bit overnight. And there's different time frames for different people, across the board. So if you come back to me and Brittany, so it all depends on what you want out of it. So if you're a swing trader and you missed the last time, you said, okay, red dog reversal clicked, I'm going to take it. If you're an active trader, you could have made money and gotten a little early, not waiting for that inflection point of the prior day low, and then kept trading it and then kept some overnight. So it all depends on your time frame, and also it all depends if you're in front of your computer and you don't just have bracket orders, because not everyone's a professional trader. There are a lot of investors out there in Apple too. So overall, you want to measure commitment to see if it can continue, and if you use a tier system around the action, you could hold some for a big move, and then within that move, you could add cash flow to your P&L.
All right, let's move on to some other names for now. I'm sure our conversation will circle us back to Apple at some point. It's pretty inevitable. Let's answer one from Labor Boy, who says, Baidu has hit new 52-week lows the last couple days. You've been saying it's a broken stock. Where do you find support?
Good question. Broken stocks, especially momentum stocks and Chinese stocks, because Chinese, they had the whole problems with the accounting firms and systems. It's just, they're always, they're rewarding on the way up, but you have to watch them so close because when they break hard. So, if you look at the longer term chart of Baidu, you'll see, here you go. Stock's been pretty much out of favor for a while. From this little trend line, so to speak, when it was, acting somewhat well, it broke it with a gap down. So a gap down, never even attempted to fill the gap, so it went in the direction of that gap. Then it paused here, gave you a little flag, and then continued. And then what happened again? You know what? The stock tried to gain its composure. Had a nice descending channel here, broke above. I remember saying, okay, we can now trade this versus gap. There's a little pent-up momentum right there. So that was your entry. And it looked good for a little bit, right? And then, we talk about high-level stops, mid-level stops. Here was a somewhat high-level stop. That should not have happened. So if you were trying to monitor it and you were riding the 8-day or even the 21-day, this second day of this move should have got you out of it. And then from there was no real bounce again. It held, down in this lower level, right? So if you want to do a bear flag, here's your pole, here's your flag, here's your gap. Didn't even attempt to fill it whatsoever. So then you continue in that direction, and then lo and behold, here we are. So the question is now, as an active trade, what does it look like? Well, here on the daily, you had your first small outside day. So good for a cash flow. Okay, if you look at it, it went through the low of 87.96. Went to almost 86. So a dollar stop and closed green. So if you were short and you look at the size of this move, a little spot to switch some gears, maybe, and cover your short. And if you're able to handle the risk and you're a believer in Baidu, because I do think it is a quality company. I think I dragged a little bit through the mud. Here's your entry. And then you have to see how it proves itself now. What kind of bounce does it have? Is there appetite? If there's appetite down here and it's going to be healthy, you want to see like a wide range bar in the next day to get it away from here. And then what you want to do is you want to see it hold higher, go sideways, to show some commitment to it. And then maybe it starts to change character. So here's a day one. I wouldn't, let me put some volume and see what kind of volume came on there. Let's go basic studies. We'll go to volume. See if there was like decent volume for like capitulation type volume, which there wasn't really. So at this point, a minor outside day, you have to see what it leads to. And then there's so many other things. You have to see, will it break its trend? It's in a pretty serious downtrend. You look here, nice descending channel here. So this could be your day one. Let it get away from it, let it go sideways, and then break perhaps this downtrend and start something new. But overall, very weak stock, very dangerous stock, below the moving averages. I'd be careful.
All right, Lulu had a nice day today. Fibonacci wants to know how encouraging the price action in Lulu was today and if you see further upside in the short term. And while we're at it, let's answer Market Picker, who wants to know how it looks for longer and intermediate term.
All right, Lulu, over the past few years has been a chosen one. We all love the clothing. We work out in it. It makes you look good, feel good. You don't get injured by wearing Lulu. But anyway, today came out with earnings last night. It was down $4, and then it closed up $4. Now the earnings are out of the way, and they, I guess, liked what they saw. So today was very constructive for the bulls. So people were saying, oh, they weren't great earnings, oh, they weren't this, they weren't that. Doesn't matter. Stock got rewarded. You look at the chart looks pretty good. Looks like a winner, okay? Looks like something in the game, okay? You want to take a look at this chart overall. Let's take a look here. Above some of the moving averages, and look how it closed today, near the highs of the day. So if you look here also, you're coming into a downtrend. So you have a nice, like a symmetrical type of triangle, or not really, but anyway, it looks pretty good. I would say at this point, if you're in Lulu, stay in Lulu. You have earnings out of the way. Look at the size of this, reversal closing near the highs. So, it might take a day or so to absorb what happened here from 66 up to 74, but I would love to see it. I wish I was in it because I got stopped out, in this area, and I don't take it into earnings. So if it goes sideways, I think you can get an add-on trade if it closes above 73.70, and then there's no reason why, if the market stays, intact, that this doesn't take out these highs here and continue to go. So overall, I think Lulu is, especially since earnings are out of the way, in the game to be a macro hold and also on every trader's radar.
All right, let's answer Lema, who says, "Hi, Coach. What are your thoughts on MCP and First Solar FSLR?" Want to start with MCP?
MCP, every I would say 4 times a year, my traders will talk about MCP, and there's like a 3-day move, and then it fails. So right off the top of my head, I'm like, MCP probably doesn't look so good. So let's take a quick look at MCP. You go to the chart. Let me get the volume off here so we could see it a little bit cleaner. Because I also know the metals have been very weak. Looking at MCP, to be honest, I thought could have been worse than it is. It's a lower level potential laggard catch-up play. You had a move off the lows, okay, which it held, and now it's kind of getting nice and tight here. So if you could be in a feeler, and if it were to start to get above, just say this 938, maybe get some action. I know I've tried this a few times in MCP. I tried it over here. Okay, there was some cash flow and it failed. Then I know here it looked tight again. Someone was talking about it. It tried to go, then didn't go and failed, and look what happened. So all in all, it's a laggard play. I'd rather see you in leaders. I'd rather see you doing other things. But if you're an MCP fan and you fundamentally love it, which I don't know that much about it, I would say that it's interesting because you have a small tight pattern here and you have a downtrend that can get above. So all in all, keep your eyes on it. And sometimes these beat up plays like this, they lift into January because people took tax loss sellings or whatever. And could at least see this moving average of 1150. So this is one of those treasures for trash trade. Like someone else's trash, could turn into your treasure if you time it right. So MCP, it could be on the radar, and I probably might even hear some guys talk about it in the office if it gets volume. So I would say make sure, big time volume comes in, especially on something like that. And what was the other stock?
First Solar, FSLR.
First Solar was a similar type play, a stock that was in vogue, fell out of vogue, and then started basing from lower levels. And it's been rewarding guys who didn't get caught in the downdraft, that stopped themselves out maybe at 96 or 100 or whatever. And now it's been moving well. I know it's heavily shorted. I think that it's been a good trade I know Mark's been all over this. And look at what happened here, first of all. Okay, this was, we talk about gaps. Here's a gap up. Look at that gap up, never got filled. So that was your first little imitation that FSLR might have changed. You had a big move from there, came in, and then it got really, really tight. And look how tight it is. You had a nice, another triangle type wedge formation, and then points of reference, very shorted. So you knew if it gets above 25, shorts get covered. People who might have sold correctly, because look where FSLR came from. My God, from even a lot further than that. You go to the weekly chart, you'll really see. And just to show you from the weekly chart and momentum stocks, everyone had the same out right here. You had this like 105 area. So when it broke this long-term support, especially a air stock or a concept play like First Solar, that's your out. And then you had a little bit of a bear flag here, giving you another chance, and then it continued. So down here, this is another trash for treasures trade. This is, if you got involved here, this is definitely your trash. If you got out here or you sold into strength or whatnot, this has been a treasure trade, as it's starting to clear, and you look at the weekly chart, it can continue. So go back to the daily one more time. I think you monitor it close, because again, these laggard type of stocks that are not that quality, are prone to failing very quickly. But at this particular point, here is your entry, and then it flagged and went again. So I think you have a gap here. So I would say, just watch this. This could be a good target for you. Oops, sorry. Let me go one more time. This goes right around here. So if it continues, it could see 35, and that's a nice little, laggard treasures for trash trade, and it's been on the move.
All right, good stuff. We're going to take a quick commercial break. Keep the questions coming. We'll be right back.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
We're back answering your questions live. Scott, let's answer Jay Deeney, who wants to know, VRSN says still a growth stock. I don't know, but if it walks like a duck, talks like a duck, must be a value stock.
Well, sometimes these broken stocks, if you hold and you don't honor your stops, it becomes a value play and it becomes an investment. Meaning you broke a lot of rules and you shouldn't have been in it. So with that said, this one was a high flyer back in the day, but every time high flyers lose their momentum, they stop growth or whatever, they're prone to some kind of corrective activity. So if you go to VeriSign right now, you'll see that it's been a broken stock. Look at this gap down, boom, tried to fill it, left a big portion of it open. So it stayed in the direction of that, failed. Then here another gap down, but from where it was, it's acting a little bit better if you're not in it. So I would say at this point, for VeriSign, you just had, let's go to the daily, I'm sorry. Okay, this is the daily. You just had some nice movement. Sometimes if you have a huge gap down and it doesn't like a gap and go to the downside and the gap's down and closes green, it means it's a bit washed out, especially if you have a 2-day move and then it flagged right here and today was somewhat strong. So it has some of the gap to fill. So I would say at this point, see if it does fill the gap. If it fills the entire gap, which it couldn't do right here, all right, maybe it's a little bit more washed out and there's more appetite for it, because on this gap down, it tried to do this and then it didn't want to fill the gap, so the appetite was weak, and then it continued lower. If this fills the gap, then you'll know that maybe some fundamental value guys are coming in, and then you see if it comes in, makes a low, a higher low, and then starts a new trend. But you're a long way away from that. For this point, I think there is some room to see how it acts to fill the gap. But once you see some kind of like tail like this where it tries to go and closes on the low, just be a bit careful. That means that momentum is running out.
All right, we have a lot of questions here about Netflix. Bound by Light, Evan English, Market Picker, they all have them. Looks like most everyone wants to know where the next long entry point could be. What are your thoughts on Netflix?
I think when it goes into the gap around 90. I was very enamored with Netflix like 2 weeks ago. Actually, it was during Hurricane Sandy when I was trading in Rye, and you had a tight pattern and it looked like it was going to get momentum and get volume. That was after Icon came in there with his news. And it really never broke. I remember 82, 83 in my head was the level. We were all trying to get it to go through there, and you made some money, but if you added, you got hurt. But then all of a sudden, it woke up again. And if you look here at the chart, this was when the Icon news came out. And remember, we were talking about how it had commitment to this. It was flagging, and look how erratic this trade was. This drove all of us to drink. We were like, oh, this is horrendous. And then I think I just got away from it because there were more cleaner things to trade. It wound up going up, came right back to test it, and then boom, wide range bar. This is on the Disney news. So with that said, it's holding it higher. So it looks like there's commitment to it. There's a lot of shorts in here. You have Icon, you have Disney, you have this, you have that. I know that I personally use Netflix now easier with my son. He loves it. I remember at one point it would never come on. You couldn't find anything, and now I think it's better service. You look here now. This is 88.56. If it starts to get above 88.5, and then or right here, which is this high here is 90. It could fill a big portion of this gap. So I know my traders are watching, and I think some guys on my team are long it. I'm not long it. I don't know why. I probably should be long some, but it starts trading above 88.5. It could fill a nice portion of this gap, and then we'll see what happens from there. But as of now, as a lower level trade, you have a lower level situation here, and it looks like the shorts are on the run, and some people are playing this and pressing to the upside.
Market Picker here would also like to know your thoughts on Facebook. He wants to know, are you still short?
Unfortunately not. I should be, because it never violated my stop. Facebook was actually something in the last month that rewarded a lot of traders. Okay, I know it's been a disaster. Anyone that bought the IPO in the 40s got hurt. Anyone who tried it in the 30s before it went lower got hurt. And then finally, there was a tradable setup. Okay, it actually all happened on the Wednesday before I was going to my Vegas trade show. I was sitting there on my laptop trading a little bit. I had a 12 o'clock car coming, and it was trading around $20, and everyone was saying, oh, it's going to go to 15, 800 million shares are coming due. Boom, and I did a little tweet. I'm like, I think the shorts are going to be in trouble here. And then it didn't go down. They got scared. It was a nice trade there. But what was important about it is that after that initial move back to where the gap started around 24, it held higher. And that's when it went on my radar as an A play. So you go to Facebook, and you'll see that this was the day that I was talking about. First of all, look at this disaster. Okay, if you know my rules on trading IPOs in the first few days, first of all, it's supposed to close at the highs. It didn't. It closed at a dead low, so that means you just take it off your radar. You're not even allowed to short it or supposed to, so whatever. Then here's your downside follow through. Then you had a little bit of a bear flag, right? It paused. Here's your pole. Here's your flag. Continuation. Then it looked decent. I actually tried being long. I figured, you had a pretty harsh or sharp move off the lows, back into resistance. Worth a try here. Got stopped out. No big deal. If you get stopped out, this was the clean level, and you can move on and take a little loss. Then closed here. This was that quarter that everyone hated, gap down. But then, funny thing happened on the way to this lower channel. It became tradable, right? Here was that earnings, the last earnings where it gapped up and people started chasing it, and then it just trickled all the way down. Then here was when the lockup happened and it didn't go lower. So right here was when it woke up, but this time what happened was it held higher. It held the top third of this range. That's when I got back in, that's when I got like a tier 1. And then above 2420 was your tier 2. And then boom, really nice move, and you could have got back, sold some. And then on this day, which was an outside day, is when I got out and I actually flipped. I got short around 28. The real stop should have been 28.88. The second day, so I made good money this day because look where it closed. And then the following day, there was no follow through, so I covered some. And then unfortunately, yesterday I was just like, you know what? It's flagging. It looks like it should. Hold on, if you take this day out of the way, go one more. It looks like it wants to go higher. So out of kind of boredom, if you look here, and just lack of discipline, I just covered because I just wanted to get the position off. But if I would have held it to my stop, and because that's the real swing short, but I'm in front of my computer every day. Sometimes I don't do that. Look what happened today. So all of a sudden you had a red day here. So anyone who's staying short, I think that you're in the game for a break of this area. And if it breaks this area, your next level comes in here, or you have the moving average coming in around 21. So at this particular point, if you stayed short from here or you got short here, it could be an add if it were to close and break below 26.68, which is that low from 3 days ago. So overall, too, you did have somewhat of a ascending channel here, and now it seems like it's on the right side of it, and it could continue lower. So if I had to have a gun to my head, what would I rather be today going home? I would rather be short than long, but I have no position.
Okay. Stock One Trader says, what do you think about Dunkin'? All these reports about Starbucks is expanding. Is that necessarily bad for Dunkin'?
Well, I'll talk about both because, Starbucks had a really nice move today. Starbucks, I had it on as a swing trade about a week ago, and again, I was just kind of undisciplined because, I had a tight stop and I really didn't trust it that much, and I got out of it. Whereas I think guys in my swing trading class, they might still have it because they, don't trade every single day, so they have much bigger parameters, or macro investors. So you look here at Starbucks, it really never violated what should have been your swing out, okay? Because here was your big gap up, right? And then it came down, and what did it do? It held the majority of this gap here. So that's one of my rules. If it holds the decent amount of the gap, it's showing power. You stay with it, and it gave you a little red dog reversal right here. So this could have been your entry. If you said, okay, I want to wait to see the pull in and see if it could hold the gap, and it means something, it did. And then you had to move off it. Then right around here is where I bought it, and then it looked good. And I guess when Apple was getting crushed and all these things were happening, I just wanted to take some risk off. And I just never got back in it. And look at this clean move. This is what I wanted it to do before. This was above 52.27, and pow. So it just goes to show you how if you're in front of your computer, sometimes you could just do things that you probably shouldn't be doing, and you violate your strategy. So if you were in this as a swing trade, and you're like, okay, I'm going to buy it right here. I'll put my stop down where it held, which is where it should have been. Or if you got in on this day when it had the reversal, or the second day, there was no reason to get out of it, and now you're enjoying a nice run that I'm out of. And your question was Dunkin'. Let's see that chart. Dunkin', in the beginning of the year, it was really good. I focused on it. There were some clean trades. Here was the IPO. It wound up, putting in a nice little cupping pattern with a bit of a handle, and I started talking about it right around here. Gave you a nice trade from like 31 all the way up to almost 37. So, and actually, it's pretty interesting. You look here, 24 to where the resistance, or just say the handle is, and that was about 29-ish or 30. So really, it was a $6 measured move. So you go from 30 up $6, takes you basically to where it went to, right around that high there. So sometimes these things do measure out. But anyway, from there, it topped out, went sideways, got a little erratic. My guys stopped trading it because definitely wasn't the easiest to deal with. And then this was your out. When it broke this trend right around, around 34, when you had the support here and you also had a trend line, that was your way out of it if you were in it from, the 28, 29, if you were not committed to it. So PS, move lower, and now look where we are. It's just kind of like a choppy mess. Maybe if I go to the weekly chart, it'll look cleaner. Still, at this point, it's just if you have it, and you believe it and you're a macro investor, just being a tier 1, for it to start getting better and for traders to start getting excited about it, it's going to have to start to clear this 33 and close over it for it to get back to the highs. But overall, I think the business model, I think Dunkin', as far as the combination of Starbucks, combination of McDonald's, the expansion that it could do, overall has a huge future. But at this point, it's really not acting well, and it's not where the action is.
So Starbucks expansion doesn't make you too concerned then about Dunkin'?
Not too concerned, because they're totally two different business models. They're obviously competitors, but it's like apples and oranges.
Right.
Or actually maybe like Granny Smith's and Fuji's.
I'd say that one.
Yeah, they're both apples. But
Let's answer Jane, who says, WFT just filled the big gap from the last earnings. So what's the next move based on the chart?
WFT.
Yeah.
Well, first things first, when a stock fills its gap, it shows you that that gap's not in control. So it takes away the power. So you go to WFT and you look here. It was been in a downtrend for a while. Okay, this has been from here all the way down. Looked, we talk here. I could just show you a little rule here. You talk about breakout failures. Tried to channel, looked as if it was going to go, tried and came right back in, and then it broke below. And then anybody who was trading it versus 1189 should have got out. Then boom, finally I guess this was the earnings, and at that point, it was more of a buy than a sell. It was like a capitulation. From 18 all the way down here, it was an opportunity if you weren't in it. And now, you look at it now. I would say the easy, if this was easy for you, I don't know how easy it was. You had your first move up to where the gap started, and then it traded into the gap, and now it's even a little bit further. So it did show some power. I would definitely take some off, and and you have a small, you have like a channel right here that it's following. The moving averages are curling up, so you do have some room. You have some room to this moving average, these two, but I would say it's hard to chase right here. Unless you really love the stock and love the story, which I'm not that familiar with. But technically, it's a better sign that it was able to come up, fill the gap. And I'm sure sometimes people love to just short something when it fills the gap because they think it's over. And for it to be holding here, that means there's still some demand and there might be some shorts trapped.
Here's one from Market Picker saying, after today's gap up in AKAM, do you believe with some time and consolidation, it could take out weekly resistance at 40?
You know what? I haven't played this in a while, but this is something that moves when it wants to. And I'm looking at the bar here, and I think it can. You look at ACAM, you look at what it did today. It did what bulls would want. It gapped up and closed on the highs, showing commitment, buy pressure, and just take a look at the chart. I'll show you what I'm talking about. First things first. It was holding the 200-day, little tough to. It's been definitely I would say choppy, really choppy. But now you have this big gap up. You have resistance right here. If you're in the stock, stay in the stock. If you're looking for an entry, what I think you want to see is it hold, like we talk about gaps. Let it hold this gap for a little bit, and then once it does, you could put your stop in here at 37.82, and then let it go sideways a little bit, and then the next time I think my traders will be clamoring about it is when it takes out this 40 or this 40.10, because it's near the highs, and typically stocks are near the highs, take them out, and highs create other highs. So right now you have a nice gap up. If it stays above this and shows commitment for the next few sessions, I think guys will be talking about it, and it could clear that. And if you go to the weekly chart to see where it can go, it's looking okay on the weekly chart too. You have this was your outside day down here just to learn from it. Broke below it, didn't stay below it. Reverse. Here's an outside day. And actually, you had another one right here. And if you want to draw this little trend on the weekly, looks good. And and there is a level here around 40. So from there, the next stop would be somewhere around 43ish, and then it's going to have to deal with this big wide range bar that had a lot of people trapped. So that comes in right around there. So all in all, it's in the game. I think if you're in it, stay in it.
All right, Ben C. Banks here would like your advice. He says, if you're not available to be placing trades intraday and can only do it near or at the end of the day, how should you be buying? He says, I don't want to chase price.
Well, it depends on the system he uses. I would use a bracket. Like there are things called brackets where you could put in some type of strategy pre-market, like an if-then. Like if a stock trades through a resistance that you think is a buy price, then the system should buy it for you, because sometimes the end of the day isn't just always a time when things happen. They happen intraday, like today for Apple, so to speak. Apple opened down $9, and you could have said, okay, if it trades above $5.39, I want to be a buyer, okay? And then once it triggers, maybe you log in and put a stop $7 lower, and then you let it ride out. So that was the strategy was, if it trades through yesterday's low, comes back above, it creates a small little outside day, that's your entry. So I would look into whatever system you're trading, looking for bracket orders or if-thens, buy stop, and then if you're in it, you could then put a sell, what's called a limit sell. So there are ways to do that, but if you're just going to be putting orders in the last half an hour, I think that it's not going to be a viable way to do it or strategy moving forward. So talk to your representative, whoever your software system's with, and get yourself familiar in putting bracket orders in.
I think that's great advice. All right, well, that's all the time we have for questions today. Any closing thoughts?
Just at this point, I feel like the market has a bid. Okay, I know that everything you see on TV is the fiscal cliff, Europe recession, this and that, and meanwhile, stocks have been on the move. Okay, we just had a nice move. You're seeing constructive action. Learn how to navigate. I know I was on the floor 2 days ago, and everyone thought that Citigroup, oh my goodness, they're laying off 11,000 people, $1 billion write-off. And you look here, look what Citigroup did that day. It went up. So you have to learn really, how Wall Street operates. It went up on what could have been bad news, so it ignited a move, and that ignited a move in our other stock we've been talking about, which was Bank of America. Bank of America was hovering around $10, became a really nice trade. There you go. So, you just have to learn the strategies. And the way, a lot of people learn the strategies by taking our courses. I'm going to do a cheap promo for the courses, but we have an active trader course, we have a momentum trading course, we have a swing trading course, and we have a few others. So I would say take the course, learn and understand why I'm talking about a bull flag or a bear flag or Fibonacci numbers or retracement levels or breakouts or tier systems. You're not going to learn it just listening to me, once a week or something like this. Learn, get the manual, read through it, and then get into the mentoring classes. And then this way you could talk to me, we could go back and forth, and you could really learn how to navigate the market. I do think that the equities are far from dead. You talk big name guys, Bill Gross, this, that. Equities are dead. Meanwhile, you do have stocks near 52-week highs. You do have the S&P like 10% off of its historic highs. And equities can make you money if you approach it the right way. So if you watch this entire show, which I guess it's sometimes easy, sometimes hard to do, you're taking the right step because you're definitely learning, but there's a lot more to learn, and just keep learning and keep making mistakes and keep working on your mistakes, and then overall you'll be making some progress.
All right, and with that said, we'll meet you right here next week for another Q&A. Have a great night.